this is Leanne coming to you from the office of the Ascend team. This video is actually kind of a fun play on words where I'm going to be teaching you the PTP method, as I like to call it, which is kind of a play on words with the PCP program. Not to be confused, totally different things, but this is something that I think is really, really important for a new consultant especially to understand. But I find that seasoned consultants, seasoned directors love and appreciate this training and are so thankful that somebody actually explained the PTP method to them. So I think this will benefit you as well, regardless of where you stand on the career ladder. So here's the concept. The concept is simply that you will pay tax on what you paid. And it's a methodology that helps you to be a conscious steward of your customers' money and helps you to be conscious about what to do when it comes to charging them sales tax. So to illustrate this, I'm going to tell you a story. This winter I had my eye on a beautiful white coat that was wool with big round buttons that came up the front with a nice little belt on the front of it. And I had seen this coat at Nordstrom 4 or 5 times. I kept walking by it, I kept wanting to have it, and I kept not buying it. I kept convincing myself that the coat would go on sale, and it did. I knew it would go on sale just about the time the new year rolled around, and I was determined that I would get that coat at a great discount. And I did. So let me share with you the financials of my new and fabulous white coat. When I saw the coat the first time, the coat was $125, which I'm kind of a frugal type of person, and so that matters to me. And I thought, if I don't have to pay full price for that, then that allows me to spend more extravagantly in other areas of my life that matter more to me than coats. So I decided I would wait till it went on sale. And when it went on sale, I found it on a 40% off rack. So when I found it on the 40% off rack, I was thrilled and so excited, because then I knew that instead of paying $125 for this beautiful white coat with the big buttons and the nice white belt, I was going to pay instead $75, and I would have a big smile on my face because I was getting it for less. So I know that you know that we've all gone through this type of situation where we found something that we loved and we got it at a significant discount. So when I take my little white coat, or took my little white coat to the counter and they rang me up for it, they charged me tax. Now let's just say that the tax in Washington State, where I live, is 10%. So at the end of all of that, I'm going to actually end up paying, or here's what I did pay, I ended up paying $82.50 for my $125 coat. Yay for me. Now, why am I explaining this situation and this story about my coat? It's because many, many times people with good intentions make a bad business decision when it comes to giving a discount to their customer, and because they just don't know what to do with the tax and what to charge. So the logic is this. The logic is, hey, I'm a retailer and I bought this product and put it on my shelf so I could sell it. And not only did I buy it and pay wholesale for it, but I also was charged full retail tax. And we all know, because you learned this in the sales tax video, that Mary Kay Corporate charges you the full retail tax, and then she sends that money to your state for you, registered under your social security number, so that you don't get in tax trouble with your business. So the part of you that's running a business like a business says, hey, if I paid the full sales tax, I need to collect it from my customer. Now back up with me for just a second. Imagine this was you, and you were buying the white coat like I bought, and instead of charging you the right amount of tax, they said to you, well, actually, you know what, we're going to need to charge you the full tax on the $125. You would never in a million years stand for that, because you would say to yourself, hey, look, the coat is 40% off, which means that it's actually $75. So I'm going to pay the sales tax on the $75, not on the $125. When you put yourself in the shoes of the consumer, that makes perfect sense. But when we step into the pink bubble, somehow this logic tends to fly out the window. And that logic flies out the window only because we have a good intention. And that intention is to recoup the tax that we've collected from our customer. Let me be the one that says to you that the paid tax on what you paid for it method is going to help you not break the law when it comes to charging your customer sales tax. Remember, you pay tax on what you paid for it when you are a consumer. So when you are acting like a retailer, you need to remember PTP. I charge my customer sales tax on the amount that I actually charge them. So instead of charging them sales tax on 125, you're going to charge them a tax on the 75. So what then? What about the missing tax money? How do you recoup that? Well, you actually recoup that by diligent bookkeeping. And of course, Ascend makes that easy for you. Anytime you do a discount, it's documenting in your tax reports how much unrecovered sales tax you have. So at the end of the year or at the end of a quarter, however you prefer, you can actually take that report out of your Ascend Live and send it into your state, and your state will give you a tax return. And so rather than trying to get that money out of your customer, make sure you go through it and do it in the proper way that's legal and ethical, and actually get that money recouped to you from your state. 48 states, to my knowledge, require this process rather than trying to milk it out of your customer, so to speak. So remember PTP, and in just a moment, you're going to see how Ascend handles that.